let's go right back to the beginning of car finance. Welcome back to the channel, folks. JD here again with another quick, or maybe not so quick, car finance related tutorial for you today. Thanks for popping by. If you're new to the channel, please do hit that subscribe button, and if you like what you see today, please do give the video a thumbs up or a thumbs down, as some people care to do. That's your prerogative, obviously. So this channel is all about car finance, hence the name. And I do various things, you know, normally on a week-by-week basis. I haven't done anything for a while, but what I wanted to do today is just kind of go back to basics. Let's just take a look at PCPs, HPs, balloon HPs, and leasing. Okay, if you're thinking about getting a new car or a used car, this video should really help you. I offer a variety of tools through the channel. If you want to ever fling me an email here, I'm always happy to give my friendly input on people's agreements or quotes they've had. Obviously, I can't give any advice, but I'm always happy to give you kind of my take on things. My experience has been built up over the last 25 plus years buying cars, lots of different cars from different dealerships, new cars, used cars, lease cars, HP cars, personal loan cars, PCP cars, and all sorts of things. And I've seen, you know, a lot of different ways that, you know, you may not realize until you dig a little bit deeper into the agreement. So that's what I want to do today. Let's just do the basics. So if you want to get a copy of this spreadsheet, which I use on most of my videos, this is kind of a spreadsheet which has kind of evolved over the last few years. It enables you to check your PCP or HP quotes or balloon HP quotes. It lets you confirm the interest rate. It lets you see what your settlement might be on the agreement at any point throughout the entire term. It will let you see what happens if you make overpayments. So it's quite a useful tool. It's a one-off donation to the channel of £10. So if you are interested in that, please do fling me an email here and you'll get information of how to, I can never point properly, how to get your hands on one. I'll also probably talk a little bit about leasing through a salary sacrifice scheme, especially at the moment. That's really useful if you're thinking of getting an electric vehicle and your employer offers or is thinking of offering a salary sacrifice scheme. I've got another spreadsheet which is here, which will enable you to compare the running costs of maybe currently paying a personal loan or a PCP on your own car versus joining a company salary sacrifice scheme. So again, if you want a copy of that spreadsheet, please do fling me an email. You can also, some people are very kind, never surprises me how kind some people are watching these videos. You can send me a gift, if you like, to buy myself a coffee with, and a few people have done that, so that's the link there. Anyway, so let's start with a PCP. What is a PCP? PCP is probably the most common way that people purchase a new or a used car. It stands for personal contract plan, and if we just do a search, so I've just done a search here, I typed in PCP deals and the first thing that came up was Audi. Okay, so no affiliation with Audi, obviously, but it will let us demonstrate how a PCP works. And what we'll do, we'll take their quote and we'll put it into the spreadsheet and we'll confirm that everything makes sense. So let's say, I don't know, we're looking at an Audi A3 Sportback S-Line. That's good, isn't it? The website has stopped working. What's going on there? Let's try again. Accept. Oh, more. Maybe if I clicked on the right word, it would help. Okay, so I hope you can see this. Let's see if we can make this a little bit bigger. Okay, so what is this actually telling us in terms of a PCP? Okay, so this is basically saying, look, it's a 4-year agreement. So when you take out any finance agreement on a car, or whether it's a lease, whether it's an HP, whether it's a balloon, whether it's a personal loan, whatever, you obviously agree the term. So in this case, they are saying this is a 4-year agreement with a 10,000 mile per annum agreement. We'll talk about what mileage means in relation to a PCP and also a lease. And it's basically saying, okay, it's a 4-year agreement and you've got to pay 47 monthly payments of $299. Now, that's the first thing to talk about on a PCP. If you get a quote and you're comparing quotes on PCPs, always make sure that you are comparing apples with apples. Now, this is a 4-year agreement, but look here, it says 47 monthly payments of $299. Why is it not 48? That's because in this particular example, you have an optional final payment or a balloon payment of $13,440.60 in this example, and that would come at month 48. So effectively, it is a 48-month agreement, but you've got 47 equal payments, and month 48 being where your optional balloon payment lies. We'll talk about what that means in a minute. However, you might go to, say, another manufacturer or another dealer, and again you look for a 48-month offer, but it might say 48 monthly payments followed by a balloon payment in month 49. So the reason it's so important to compare exactly the same terms is because the overall interest across a 49-month agreement will obviously be higher, but the monthly payment may be lower. So you're going to go, oh, 4-year agreement here, let's say $299, 4-year agreement here, $280. Oh, I'll go for that one. But remember, you're paying one more month of £280 because it's a 49-month agreement. And that's what I always say. Always make sure you compare like for like. If you contact, I've done it before. You email a dealer, you say, oh, I've seen this used car on your website. Can you do me a quote on a 48-month agreement? You get it back and it's 48 equal payments. Month 49 is where the optional payment lies. Okay, so just bear that in mind. What does the optional final payment mean then in this case? So on a PCP, the optional final payment is normally guaranteed. So it's sometimes called the guaranteed future value. Okay. Now, the reason that PCPs are very popular is because that optional payment, hence the word, is optional, but it's also guaranteed. What you've got to remember with a PCP is that it isn't a lease. People sometimes think a PCP is a lease. It's not. It's just a loan. It's a HP agreement, if you like, secured on the car with, in this case, 47 small payments and a big payment at the end. So if you pay that guaranteed amount at the end, you own the car. But because it's guaranteed, let's say at the end of year 4, that car is worth 500 quid. Not that it would be, but it's worth 500 quid. The finance company are taking the gamble because you can hand that car back. The car's worth 500 quid, but effectively you owe £13,400. They will take the car off you and you can walk away. So that's what a PCP is. It's guaranteed. Now, at the moment, because there's such a shortage on new cars and used cars, the value of used cars is going through the roof. The nice thing about a PCP also is, let's say you come to the end of the 4 years, and in this case we owe £13,400 to pay it off. The car might be worth £16,000. So you can take that car and you can sell it. Now, it's a little bit difficult to sell a car with finance on, but if you go to somewhere like We Buy Any Car or Heaven's House or whatever, they will pay off that finance for you and they will give you any equity that's left. So if we say it's worth 16,000 quid, we could effectively walk away with over £2,500 in our pocket. So it kind of works both ways. So in this case, look, we're paying $299 for 47 months. We've got to put a deposit of 6,795 in. The recommended price is 29,000. Optional purchase of 13,000, whatever. So the total amount payable, look, is 34,299. Now that 34,299 assumes that you're going to make the optional payment. If you don't, obviously the total amount payable would be, 21, but you'd have to give the car back. Now, they're quoting 6.4% APR. I'm not going to talk about what APR is and how you work it out. There is a video on the channel. But essentially, one thing to always bear in mind when you go into a dealership, make sure they quote you the APR, annual percentage rate. It's quite complicated how it's calculated. But if you say, what interest am I being charged on this? And they say 3%. You might go away and go, wow, well, hang on a minute. Audi was saying 6.4. This dealer's saying 3. I'll go to this dealer. However, they may be quoting what we call flat rate. Flat rate and APR are completely different things. And as a very good, simple rule of thumb, if you're ever quoted flat rate, double it to get the APR, roughly. So in a way, this is 6.4% APR. It might be 3.2% flat if we did the maths behind it. So just bear that in mind. Right. So let's just take these figures into the spreadsheet and work out if everything's in order. So we'll go to the spreadsheet. Look, the total cost. Now, if you are ever trying to negotiate buying a car, always start from the purchase price. Because as you've just seen, when I talked about 47 months agreements, 48 month agreements, there are various ways that a monthly payment can be reduced, but that doesn't mean you're getting the best deal. So when you're comparing deals, always start with the purchase price and the APR. That's what I would say. Forget about the monthly payment to begin with, because you can change the monthly payment. You know, I could make that guaranteed future value 15,000 quid potentially, bring your monthly payment down. But it still means that you've got more to pay at the other end. So it's not as simple as that. So start with the purchase price. So in this case, look, our purchase price is 29,730. So we'll put that into the spreadsheet. Deposit we've got to put in is 679540. They are putting in nothing. Okay, so the spreadsheet will enable you to put a dealer deposit contribution in, which is very common, certainly with new cars. Guaranteed future value or balloon payment is 13,440.60. Option to purchase fee 10 quid. Doesn't really make any odds on the maths really, but we'll put it in. And let's say we were going to buy it this month, so that's November 21. Quoted APR, they are quoting 6.4 and the month. So this is important. If you ever use this spreadsheet, this is the equal months, not the overall. So in this case, it was 47 equal payments. The spreadsheet is coming out. Oh, there you go. Look, it's always slightly out because there's rounding errors and things, but the spreadsheet is telling us 299.17. They are quoting 299 dead. Okay, that's fine. So we know the spreadsheet's working. Now, the nice thing is about the spreadsheet is give or take a little bit, because there will always be, again, rounding and maybe some admin charges that the lender will add on. We can see roughly what we're going to owe at any given time. And this follows the early settlement regulations, which any regulated car finance agreement will follow. So if you are taking out a loan, if it's from a main dealer, it will be regulated. So if I said, okay, well, I wonder what I'm going to owe after 12 payments. So if we go here, look, you see it's coming out roughly at £20,700. So the spreadsheet enables us to kind of track the car. So let's say after 12 months we get bored with the car, we get a valuation from somewhere like We Buy Any Car, because that's usually a pretty good bet, and it's coming out at 22 grand. We know that we would have to find 20,700 to settle the agreement, so that means we've got a couple of grand in our pocket, or 1,200 quid, I think. I said 22 grand in there. Okay, so that's why the spreadsheet is so useful. There is also something on any regulated PCP or HP agreement, not on a personal loan from the bank, which is called voluntary termination. What does that mean? This is something which gets, I think, a little bit confused and maybe a little bit misunderstood when you go to dealers. A voluntary termination right, there's various points throughout the agreement, but the easiest one to remember is halfway through the agreement, you can hand the car back. Now, I deliberately said that wrong, because that's how some people perceive it, the voluntary termination to be. They think, okay, I've got a 48-month agreement. When I've made 24 payments, I can give the car back. And that's wrong. Now, that does roughly work with a HP, but with a PCP, because you've got that massive balloon payment at the end, the voluntary termination point normally falls very close to the end. And actually, in some circumstances, you will never meet the voluntary termination point. What is that? Basically, is where you've repaid 50% of the total amount borrowed, including charges. So in this case, look, the total amount with interest is £34,307. So when we have paid 17,150-ish, we can give the car back. So we go over here, look, the spreadsheet tells me, there we are, look, total amount payable 34,307. So 50% of that is 17,153. We will have reached that at 31 months, not 24. Okay, now obviously the bigger deposit you put in, the earlier you will potentially reach that point because the deposit counts. So if I didn't have any deposit, lot, obviously our monthly payment's going to shoot up to 462, but we're not going to hit the VT point until month 37. So something to bear in mind. If you're thinking, oh, I can walk away from this after 24 months, normally you can't on a PCP because you've got that massive balloon payment at the end. If it was a straight HP and we didn't have a balloon payment, so we can just put 0 in there, look, the monthly payment's going to be massive because rather than paying from, say, this point to this point where the balloon payment is, we're paying from this point right down here to 0. We will reach the VT point, look, at month 23 because the interest is front loaded. So the earlier on you're paying more interest, if you see what I mean. So in this case, look, yes, roughly halfway through we could give the car back. That's with an HP. So let's talk about HP. HP is exactly the same as a personal loan pretty much, apart from you haven't got certain rights such as voluntary termination. But HP is basically where you borrow a certain amount of money, you put a deposit in if you wish, and you whatever's left, your interest is added on and you pay an equal amount each month down to 0. So once you've paid the final payment, you own the car. So slightly different to PCP, but not much different because on a PCP, you just got that massive payment at the end. If you pay that off, you again can own the car. So that's the main difference between HP and PCP. Not a lot. The thing to bear in mind with the PCP, and I've done a video on this before, often I think this is misunderstood. Often dealers will say, right, a PCP, you have your deposit here, you have your balloon payment at the end, and this bit in the middle is the bit you're paying off. That is correct. However, just remember always you pay interest on all of it, less your deposit. So whether you pay this balloon payment off or not at the end, they've charged you for it. Okay, so never go into a dealer thinking, and I had it years ago. Before I started getting my head around this stuff, I walked away from a dealership thinking, oh, brilliant. I pay my deposit. I've only got to pay this bit. And this bit is optional. Yes, it is. But interest is applied on all of it. So the higher the interest rate is, the more interest you're paying on this balloon payment that you may never pay off. And if you do want to keep the car, what are you going to do with that balloon payment? You're going to probably refinance it, which means you've paid interest on the balloon payment first, and then you've refinanced the balloon payment and you're paying interest on it again. So just bear that in mind with the PCP as well. If you definitely know you want to keep this car forever, you're probably better off going down the HP route or a personal loan. See, what we could do, look, is we could say, well, how much would it be on an HP? Well, yes, the monthly payment's massive. Let's put the deposit back in, 6,795.40. So if it was a straight 48 month, so 48 equal payments, in this case, HP, it would be 540 quid versus 299. So you can see why PCPs are so much more attractive because the monthly payment is much cheaper. However, if we look at our amortization table, look, at the end of month 48, we owe nothing. With the PCP, if we change that back to what it was, 13,440.60, obviously the monthly payment's a lot less. Let's change that back to 47 equal payments. So 299, but at the end of month 47, look, we still owe the 13 grand. But we've paid interest on that 13 grand every month because we've never paid it off. So the interest payable is massive, look, 4,500 quid, but we still owe £13,500 at the end. One last thing about a PCP, what happens and what's this mileage thing about? So at the end of a PCP, this guaranteed future value, so in this case 13,440, let's say the car's only worth 11 grand. If you have done under 10,000 miles a year, and remember it's 10,000 miles a year across the contract, so you don't have to do 10,000 miles a year. You could do 2,000 miles in one year and 18,000 in the next. It's 40,000 miles, if you like, across the entire contract. Let's say you get to the end and you have done 42,000 miles. They will go, okay, you've done 2,000 miles over and you want to give the car back and you want to take advantage of this guaranteed future value. What they will do, and I don't know whether it tells you here, but they will charge you an excess mileage charge, pence per mile. So let's say it's 10 pence per mile. You've done 2,000 miles over the agreement. They will knock £200 off. So they will charge you 200 quid if you want to take advantage of this guaranteed future value. If the car's worth more and you want to sell it on and you want to take that equity, not an issue at all. So mileage only comes into it if you want to take advantage of that guaranteed future value and hand the car back at the end. If a month before you go, right, I wonder what it's worth trading wise, you get a trading price and it's a bit more than the guaranteed future value, happy days, doesn't matter what the mileage is. So that's something to bear in mind as well. Now, sometimes people, to get a really cheap low monthly figure, will change the mileage to say 5,000 a year. Now, yes, you can do that, but if you go drastically over that, you're probably going to find that the trade-in value is less than what you owe, if you see what I mean. So it's a balancing act. So that's PCP and HP. Personal loan. So personal loan, if you've got a very good credit score, and if you look at places like Tesco Bank, Sainsbury's Bank, all these places, you might find, I haven't looked for a while, but you might find APRs of 2.9, which is much, much less than here. Now, the only problem is, and I've done this myself, you only, unless you are pre-authorised on a loan with somewhere like Experian, you can often go into Experian and go, and they will say, we guarantee you will get this rate before you apply. The problem with a lot of these places is they only have to give the representative quoted APR to 51% of applicants. But you often never know whether you're going to get it until you go through the application. And it's a bit of a vicious circle. I've done this before. So I've applied for a loan and it's come out and it says I'm going to get 2.8, and I do the application and it says I'm only going to get 3.5. So then I go somewhere else to try and do it. But that application is now on my credit file. And if you do it too much, the lenders will go, well, this guy looks a bit desperate. We're going to give him a higher rate. So that's the problem with personal loans. But if you can get the rate you quoted, let's say we were going to go, okay, we were going to do this on HP. So we'll change that back to, say, 48 straight months. We'll get rid of the balloon payment. So 6.4%, this is how much a difference interest can make. So straight HP, the deposit that Ad is quoting here for 48 months, 6.4% APR, £540 a month. Now, if you could borrow £22,000 on a loan, and again, this is something where on really high value cars, loans don't sometimes work, because often you'll find that personal loans are only up to, say, 25 grand or 30 grand. But let's say we can borrow £22,934 and we can get a rate of 2.9 from, say, one of the high street banks. 506. So getting a personal loan, if you could, you can see the total charges, look, only £1,300 versus £3,030. So you're saving 35, was it? Getting on for £35 a month. So that's another way of doing it. Now, bear in mind, if you do a personal loan, you aren't protected as much. So you can't do the voluntary termination, for example. It's also a personal loan. So it's not linked to a particular asset. So, it's unsecured versus a secured debt. So there are advantages of going down the PCP with the dealer or a third-party finance house because it's secured on the car, but sometimes the rates won't be as good. I think it would be highly unlikely to ever get a PCP on a used car, for example, of 2.9. I'd be very surprised. Right, the last option we're going to look at today, and I might tie this into salary sacrifice as well, is a lease. So if you go to, this is a really good website if you're looking to lease a car, leaseloco.com. You can find anything you want on here. So let's say I'm going to go, okay, I'll tell you what, let's try the Audi A3 again. See what comes up. Audi A3 Sportback look on a lease. Let's have a look at this. I've done some videos comparing lease to PCPs on specific cars, so that's always worth looking at. Now, a lease is basically renting the car. Sometimes they are called personal contract hire rather than personal contract plan. You put a deposit in, you agree mileage, you agree the term, you rent the car, and at the end you give the car back. On a lease, normally you haven't got an option to purchase the car like you have with a PCP. So you rent the car, you give it back. Okay. So in this case, look, we could go, okay, let's choose 10,000 miles a year over, say, 4 years. Look, £358 a month with an upfront cost of 4,297. So that is quite a lot less upfront cost. Look, 6,795 versus 4,297. Same mileage, 358 a month. Sometimes PCPs are cheaper than leases. Sometimes leases are cheaper than PCPs. But as I said, on a lease, you've got no option to purchase the car. And it's also sometimes quite a lot more difficult to get out of the agreement. Okay, so you might say, I want to get out of this agreement. What are my options? Well, on a PCP, you could technically sell the car to We Buy Any Car. If it's in negative equity, pay the difference. With a lease, they might say, okay, yes, you can get out of the agreement, but you need to pay all of the outstanding payments left, or maybe 50% of all the outstanding payments left. So leases are very good, certainly for company cars. If you want a fixed amount, you can often get, maintenance and tyres. Because leases are normally registered to the lease company, they're responsible for the road tax, so there's never any road tax to pay. It's all in part of the lease cost. Leases can work really well, certainly at the moment with electric vehicles and salary sacrifice schemes. I've done videos on salary sacrifice before, but very, very basically, salary sacrifice is where you lease a car and the gross amount is taken from your salary, and therefore, because it's taken gross from your salary, you save the national insurance on it, your company saves their national insurance on it, and you save income tax. And a very quick rule of thumb is if you salary sacrifice a car as a 20% taxpayer, you save roughly 32%. There is benefit in kind tax to pay though, so company car tax. If you were to salary sacrifice something like this car, it probably wouldn't make much sense because the company car tax would be huge. On electric cars, for this year it's 1%, and for next year up until 24-25 it's 2%. 2% of what, you might ask? Basically, the P11D value, basically the purchase price. So let's say you're having a Tesla Model 3, £50,000. You take 1% of that, which is 500 quid. 500 quid is the benefit. That 500 quid comes off your tax code. So if you're a 20% taxpayer, you will pay just £100 a year in company car tax, about 8 quid a month. It might be a petrol or diesel car might be 30%. So if you take 30% of 50 grand, that's £15,000. Okay, you take £15,000 off your tax code, you've got no tax code left. So it's costing you a fortune. But electric vehicles, with the benefit in kind being so cheap, it's a really good time to look at that, and check out my videos on the channel if you're interested in that. As I said, I have got a spreadsheet that you can get to work out if it's worth doing. Now the other thing is, because it's technically a company lease, the company can claim about 50% of the VAT. So in this case, and it wouldn't probably be this amount because there's other things they build in. Certainly on full salary sacrifice schemes, they've got maintenance built in, they've got insurance built in. So don't take this figure as what it would be on this particular car, but as an example, 358, they could take half the VAT off that. So the amount that you would sacrifice in this example might be more like, 300 quid. Okay, so it can work out really beneficial. Most salary sacrifice schemes, if it's a true salary sacrifice scheme, will give you protection. So let's say you are made redundant, or let's say you resign. Normally, if you've made 3 payments or 6 payments or whatever it is, you can give the car back. In the past, that was why salary sacrifice schemes were sometimes a bit of a risk for an employer, because what happens if that employee leaves? The employer is stuck with that lease. but there are new schemes. LeasePlan do one where they do something called LeasePlan Confident, which is where you pay a tiny bit extra on the lease each month, and it covers various life events, redundancy, resignation, etc. You can give the car back. I hope that was useful. I just wanted to touch base and just go through the basics. If anybody does have any questions, please, as I say, do fling me a line here, wherever it is. Somewhere. I can't point. It's really weird. If you want a copy of this spreadsheet that I've been using, like I say, do fling me a line. It's a one-off donation of £10. If you want a copy of the salary sacrifice spreadsheet for electric vehicles, that's really worth having as well. Again, drop me a line and I'll tell you how you can get a copy. In the meantime, like I say, if you haven't already done so, please do subscribe. And if you liked this video and you found it useful, please do give it a thumbs up. Until next time, please do take care. All the best.